more into short to medium term. Okay, so again, thank you very much for attending today's webinar. I think we've just got a few more that just popped in, so welcome. And today we're going to cover a couple of very interesting things. I think I've got some questions already. Give me a second. Hi there, Zaman. You've missed the first lesson. Okay. Yes. You can email me at kenny@orbex.com, or you could always go onto live chat at Orbex. I'll be happy to help, and you'll be then sent a relevant reply to that. Okay, and they'll help you with it. Okay, the customer support at Orbex will help you with that. Okay, thank you, Zaman. Okay, there we go. So shall we then start? Just before that, a very quick risk disclaimer. Okay, any opinions, news, research, analysis, prizes, or any other information contained on this presentation and uttered by myself is provided as general market commentary. Okay, so and it does not constitute of any investment or financial advice for your trades or your current positioning of your trades. Now, myself as well as Orbex Limited will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use or reliance on the information I have shared with you today. Okay, and the first paragraph, of course, is something very common with regards to trading the foreign exchange market, which is carries a high level of risk and may not be suitable for all investors. Okay, so the high degree of leverage can work against you as well as for you. So before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Okay, guys, so that's me with the risk disclaimer, and then we shall just begin. Okay, and here let me just answer a couple questions here. I think I've just got full screen. You are right, absolutely, Mr. London. I'll just have that. Give me a second. Yeah, just about to do that. Okay, there you go. Oh, I think I've got it on full screen now. Okay, so what we're going to talk about today, a couple of things. I think I will have about 5 questions, from today's presentation slide, today's part 2, and for the quiz question. So we'll start off here with the global gold demand by sector. I'll talk a little bit about, the current status of gold in terms of supply and demand. I mean, couple of presentation slides to share with you. So as you can see, we've got here from Thomson Reuters. It's more on the focus on precious metal, and with the what do you call that, numbers coming from the World Gold Council. As you can see, you've got various categories in terms of gold's demand coming from various sectors. So you've got the jewelry sector, you've got technology, investment, central banks, and other institutions. Now here you've got gold demand coming from jewelry. Now this is where I would like to share with you. As you can see, you've got that that jewelry part. It's made up of 53%. Now, as we speak today in Switzerland, okay, we have got quite a heavy sort of visits by business investors from China. Now, China has got its foot in Switzerland, but not for jewelry per se, but they are competing with the jewelers there with gold demand. Okay, so as we all know, I've shared this with you guys as well in the past, or even during my presentations and workshops or training, that China has got an aim of accumulating or holding at least 8,000 tons, but they are on a 4,000 to 5,000 ton purchase of gold in their central banks or within their governments and things like that. We're talking about official gold. Okay, so official gold in the world, we could say close to about 35,000 tons to 40,000 tons. Okay, but we talk about these are gold that are available as official gold. Okay, so once China hits that 8,000 mark, or that objective of owning or holding official gold of 8,000 tons, it will have a great play over the market on gold's prices. Okay, so this is where we've got a bit of a battle in Switzerland, where we've got jewelers like Longchamp or the other one, Rolex especially. They have been really, how do you call that? Loyal customers to the refiners, because nowadays because of how the structure of the market is, it's not that easy for us to purchase, for the buyers to purchase gold directly from brokers. They've got to go to the refiners. Okay, so the refiners will take more days to produce that gold, and because of that it would increase the demand much more. So these jewelers basically have got a bit of a battle to get the gold per day or per week sort of demand, because we've got China coming up with loads and loads of request and demand that they're quite aggressive with that demand, okay, on a weekly or a monthly basis and things like that. So the jewelers, the refiners in Switzerland are having a bit of a tough time in balancing that act between whether to to service the jewelers or to service the biggest buyers now in Switzerland itself by the Chinese. Okay, so this is where we could see that coming about with that 53% as well. This is a 5-year average as well. Okay, gold demand by sector. Then you've got technology, investment, least of course you've got technology, because a lot of quite a number of traders have asked me whether or not it is like silver. I mean, silver would have that pie enlarge a little bit more in the technology section, but jewelry would be the predominant sector covered by gold. Okay, give me a second, guys. I think I've got some question here. Okay, if China does not hold 8,000 tons at the moment. It has officially given a number like 1,658 or something like that, which is close to 2,000 tons. That is what it has officially written. Okay, but with lots of evidence, internal research, and things like that, some numbers have showed it to have to possess close to 4,000 plus ton. But its aim is to hold 8,000 plus tons. That's the aim, the goal, not what it holds now. Okay. There's a question by Zaman that what will happen with the price go gold, high or low, and how it will relate to AUD USD movement at this core last. What's your opinion? Okay, that's a very good question, but I must say that the yuan or the gold movement nowadays has got more in connection to the dollar and the monetary policy, fiscal policy conditions, economic situation and condition in the US. So it's much more correlation at the moment. Now, a good tip to give you at the moment is that I don't know whether you guys have actually heard of Sharia Gold. So Sharia Gold basically means that the Islamic community will be allowed to actually own gold as well, and that will be released, if I'm not mistaken, correct me if I'm wrong, by the end of this year, from 31st December onwards. So that will then flood the demand for gold even more. So Sharia gold is actually quite a big thing. So perhaps you want to read about it. They've got more that will come through there. So this is what we're going to talk about today as well, Zaman, and we're going to talk about what's the current position here with Trump as well. I want to talk a little bit about Trump and Trump policy and how Trump is running the country at the moment. His policies, his team, the people that is under him as well are all actually part of the same kind of model that Ronald Reagan has run the country before. So there's quite a number of things that how they will run the country and what sort of business dealings and things they'll allow or things they will ban or things like that, relationship they'll build, has got a lot to do with the US dollar, and then it would relate as well with price movement of gold. Okay, so that's basically it. Nazim has got a question. Where does China want to hold that specific number of tons? It's got a sort of, you see, the thing is about China. China has got a lot of inside dealings and relationship with the United States as well. So China does absorb a lot of the US debt. So by buying all these treasuries from the US debt, from the US. So this basically has got an inner sort of working whereby it wants to build a kind of how do you say, inner alliance or a very special relationship with the US. So, nothing would beat or would be better than number one economy and number two economy becoming a superpower, because, at the end, it's all about, playing the chessboard of economy, right? So you want to combine and gain more power as opposed to compete. So owning that specific 8,000 plus tons, if I'm not mistaken, does give China a bit of a hedging position, a better hedging position, because you guys would need to understand that the reserve banks have got gold reserves, and these gold reserves are for hedging purposes as well for their treasuries. Okay, so they don't just hoard or keep the gold because they just need to keep it so they appear much richer. It doesn't actually work just like that. What it does is got a lot to do with their inner transactions with their banks, reserves, their hedge funds, and all that. So they use the gold to actually hedge that. Okay, because long before our time, they use gold in exchange for military purposes to go into war and things like that. That's why at the very beginning, gold hoarding or gold reserves actually went down, mainly because countries go into war. So now they've got different purposes. Now the war has changed. The kind of war has got to do with trade wars and currency wars now. So it's very different, okay, the kind of wars that we are in today. So as another question by Nazim, China is also getting rid of the US dollar reserves. Yes, you are right. So are they not just replacing that with gold reserve? You've got some point there about replacing it, but it's not a matter of direct replacement. They cannot replace it like that. You know why? Because they rely on each other, China and US dollar. And the US, sorry, because we've got a bit of a circular movement internally where they allow each other to manipulate the, like the US would allow China to manipulate what do you call that? It's yuan strength and all that, and then the US, they will come into manipulating the price of gold when gold prices jumps up too high. When it goes steady, they don't actually manipulate the price of gold. So this thing about a bit of a limbo between them, they are sort of dancing in the moment kind of thing internally between the US and China. So no, they don't actually make that as a replacement, but it's more a reserve that would give them a better backup. You see, a better backup, because now you guys heard about Troika as well, where it's a combination of IMF, ECB, European Community Board, and also the European Commission, EC. So all these three makes up the Troika. So when you hear about Troika, releasing a bailout for Greece or any one of the I think the PIIGS countries, okay, the highly debted ones, and these money has to come from a collective reserve, and that collective reserve comes from China. A big part of bailout money actually comes from China. So how do they actually do that release when they do a release that is backed up with how much reserve they've got? So this is a very important part for you guys to know. Okay, so this is a very good question, Nazim, but this area of replacing is not so much a replacement. Okay, it is more a way that they've got a bit of a different mechanics now working between gold, US treasuries, and then US as well. But now it has a lot to do with how Trump is playing the game as well, because it does relate a lot. We'll go into that much more, okay, in a bit. Let's just go on to the next slide here so you get a bit of an idea. Give me a second, guys. Let me Just see. Okay. All right, next slide here. I think I've shared this during the first part, if I'm not mistaken, but this is to give you a bit of an idea of the US dollar index. The US dollar index's position here reflects the connection with a basket of 6 other currencies. So it is actually quite essential for us not to just monitor directly what's happening with golds and gold's prices, okay? It is actually highly important to look into the dollar's strength, the dollar's position, and what's going on in the US. So here gives us a bit of an idea of the US dollar's index position. As you can see, technically it's been drawn here. As you can see, it's provided by stockcharts.com, I think, not mistaken, but it's also been shared in Bloomberg. And here you've got, in the box, it says a 30-year upside breakout is a dire warning that the US may well continue to rise. So this is where we want to talk a little bit about the position that we are in with gold as well as the US dollar, the strength of the US dollar, because we are expecting inflation first, and this inflation may actually lead to more price of gold. And as I've mentioned, we've got lots of things happening by the end of the year that would give us much more backup of more prices of gold to go up. But I just want to give you a little bit of an alert where a lot of correlations now starts to break, meaning you know, sometimes you think A and B would go at the same sort of direction. Now A would maybe go up and B would go up as well, and things like that. So I just want to give you that alert that this is the timing of when quite a number of correlations will not correlate as it used to. What goes the same way may start to actually go opposite direction. What has gone opposite direction may actually go the same way. So this is something that I myself as a trader have learned, that we cannot rely on a correlation far too long. We need to be alert on when it could possibly change. Okay, so I want you guys as traders to be really careful and aware of this phenomenon. So here, technically, as you can see, you've got a blue sort of trend line there. It's actually shown that it has sort of risen and broken out of that wedge-like blue, what do you call that, trend or channel there, and then a bigger trend line there as well has shown that it has been breached by prices going upwards, okay, for the USD index. And here with the MACD as well, and as well as those of you guys who are more familiar than me with the RSI and the MACD would see that that has also shown some more strength of the dollar. Okay, so we want to relate with what's going on in politics and economy as well with the new President Trump. Okay, we want to talk a little bit more about the future of what to expect with not only gold but then other precious metal as well in part 3, so that we have a bigger picture from medium to long term. Now we're going to talk about from now on until the end of the year, what is to expect and what are areas that we need to be very aware and alert to, in order for us to get a better positioning in understanding on how to trade gold in stages. Okay, so here, for example, we've got the gold to oil ratio. I'll take you through on things that I need to share with you on the current positioning of gold at the moment. Okay, here itself, you've got the gold to oil ratio. So it is the price of gold per ounce, of course, over the price of oil per barrel. Okay, so it tells you how many barrels of oil you can buy with 1 ounce of gold. As you can see, you've got the years at the very bottom here from the 1950s, or just before that, right down to now, right at the very end, and you can see that here itself you've got an increment, quite an aggressive shoot upwards of prices as well, okay, in terms of price of gold per ounce over the price of oil per barrel. So that itself would give you a bit of an idea that is what's happening, and it's quite an aggressive sort of jump upwards. Okay, now here we've got Some golden tips I would say to keep in mind to understand what's going on. I've got sources here from Morgan Stanley right down to other banks, TD Securities and a couple of others. So I want to share with you on these ones. Now, in 30 years, the 2016 basically strongest quarterly performance. We talk about strongest quarterly performance of gold, especially the first 3 months in 2016. Okay, and a lot of people are talking about being aware of the new gold standard. Now, that new gold standard could be anywhere from what we've just mentioned about just now, the Sharia gold, or something else. Okay, as you guys may perhaps have heard about. Some currency wars has actually just been announced yesterday, day before yesterday, if I'm not mistaken, between Turkey and the States. So we have got Turkey now going, making trade relationship with Russia. So they're doing a bilateral trade between them in their own currency. So you see, this is something quite, it's not something overly surprising, but it's something that other countries can start to combine among themselves to benefit themselves. So you could see that there's a possibility of other countries who wants to join other countries and form their own alliances, and this would be the main reason is to challenge and compete with the U.S. because of its U.S. rising dollar. So that area of countries trying to do that, like for example, Turkey now will be buying things from Russia and paying in the Russian ruble, and vice versa. You've got Russia going to be buying things from from Turkey, paying the Turkish lira, things like that. Okay, so they've got a sort of bilateral agreement to do that, and that forms an alliance between them. So this is basically what we see as lowering their currencies as well, in order for them to be able to benefit the other trading partner. So this is something that we're expecting that to happen much more, because countries wouldn't actually go into that so much if they have not done a proper, thorough research into understanding that the US dollar can only go up. Okay, so due to some reasons that due to the research and some findings and what's going on now, I just want to point out more on the current economic state in the US and whether or not you've got more inflation that we will be looking at, and whether that inflation would impact prices of gold in what way. Okay, so be aware of that, a new gold standard. We're also talking about monetary policy changes every 30 to 40 years, so that can go hand in hand with a new gold standard. And then we've got gold prices by Morgan Stanley. I think as of last week, they are still maintaining their sort of optimism or forecast on gold at the 1,250 range by Q4, meaning by the end of this year. Okay, so that's Morgan Stanley's sort of forecast. And then we've got gold in danger zone, and by TD Securities. I'll share the slides on these ones as well. And the question as well is about the Federal Reserve's hiking the rates tomorrow, whether or not it would happen. If it does actually happen, of course, the possibility of it, the probability of it has only risen. Okay, and this is what they are all talking about, and the confidence level has just increased from day to day. So if they do actually increase rate, the big question is whether gold's prices would rise as well. Okay, so we want to go into that as well. I'll share with you some slides, and also Trump's position. Now, is Trump good for gold? I want to talk about Reaganomics. Reaganomics is concerning Ronald Reagan's time when he was president. Quite a number of things I've noticed. Also, it was on the papers and the news talking about asking or questioning whether or not Trump's model of operation nowadays is actually quite close to how Ronald Reagan have actually run the country, because of Trump's team, okay, his team at the moment, the team of candidates that he has actually elected or filtered to join his team of presidency are all from the Trump's sort of era. You know, the whole model that they worked with as well is all very not Trump, Reagan's era. Okay, so that's something. And then you've got current downtrend for gold at the moment. I know a lot of you guys would be questioning, is it time for it to reverse, go back up? So we want to go into the charts as well at the very end to look into that. Okay, so just before sharing with you the rest of the slides, I want to answer some questions first. Nazim, you've got a question here. You've read about you've read today that the US dollar strength is concerning to the Fed, so this may be to do with this new Russia. Yeah, very much so. That is definitely it. But I want to share with you on what goes on with Trump and his plan forward, because his plan forward is actually stirring up all the naughtiness that is actually planned by the other countries around the US. Okay, because before Trump came in, we've got China's relationship with the US is, you know, is sort of solid dependency, you know, between the two countries. But again, Trump has got a very different mindset of things. Of course, he's anti Yellen as well. He's not really into her being the chairwoman, you know, of the Fed, and he's against all that. But he's against all that because of what he is not allowed to do or not really encouraged to do if Yellen is still there. So there are things that he wants to do that we want to talk about, and that these are the things that would actually give you a better idea in understanding goals. You know, forecasts. But this is my belief. My belief is that it's difficult to think of gold's prices are the only ones that is going up and down. For me, it's only a reactivity. Okay, so we need to look into the US and the US dollar's position and status in order for us to look at how gold would react to that, because it's only a reactivity plan, okay, for gold. So let's move on to the next slide. Okay, so here, for example, we've got from GoldCore. You can always type this. Yes, this is what we've mentioned about a new Sharia Gold Standard. Okay, they talk about its debut in December. I think it's 31st of December. It is actually known and has been talked about from last week until now, but the best part of it all I've noticed is it's not so much on mainstream media, CNBC, Bloomberg. It's got certain time of the day that it actually releases that, but then I find and notice that you've got this coverage of Sharia Gold Standard in the other parts of the world. So I've got friends in Iran, for example. I've got friends in Malaysia, other Muslim countries. I see that the coverage of this Sharia Gold Standard is really big in their mainstream media as opposed to the Western world. Okay, so that may tell you a lot. Maybe it's telling us that, okay, they might want to not give too much shine to this gold, new gold standard, Sharia Gold Standard news, you know, in the Western world. But this is a big demand. So as you can see there, Islamic gold, important new dynamic in the gold market. 1.6 billion people. This is the population of our respected Muslim community, of course, and this is basically what the market is made of. Okay, so this is huge, and they will likely have a new gold investment standard. It says here, so the Islamic finance market expected to grow to US 5 trillion by 2020. I understand a little bit about how the not only Sharia gold but Islamic banking sort of works, especially because I come from Malaysia myself, and I find that this is something that is going to trigger a very, very huge demand, and that will then impact price of gold big time, in my opinion as well. So Islamic asset classes have all underperformed, okay, compared to gold, and gold has risen over 367% in US dollar terms, and by more in currencies used in Islamic countries. Gold bullion products may be additionally appealing to Islamic banks due to this Basel III rules. You can always type that onto Google, give it a bit of a read. You'll understand more about it. And then you've got new Sharia Gold Standard will impact gold prices for sure. I agree with the last thing, and we want to look into trend. We want to look into more. Hence the reason it is really, really important not only to look into the technicalities of things onto your chart, trend lines, indicators, and all that. We need to look into the geopolitics side of things as well, like news like this, as well as what Trump is doing and how his team would actually impact the US economy and his relationship with the others, and then you can then get that follow through to know about how much prices of gold would be impacted as well. Okay, here you've got gold prices rise 16% in Q1, best quarter in 30 years, as we've mentioned in the first slide. Gold prices, they gained 16% in Q1. As you can see, on your left there, gold is being the first one. Look at how long that horizontal bar is. It's marked at 16.26 there. Okay, so best quarterly performance since 1986. Okay, so gains due to increasing global financial, macroeconomic, monetary policy. As you can see, most of the news that I've read as well highlights all these areas. Okay, macroeconomic, monetary risk, and all that kind of thing. So I see that we would need to balance it out properly between your technical analysis, your geopolitical or fundamental analysis properly, okay, to get that bigger picture, and then trade in stages, okay, because it's highly risky to look into far too long a term, okay, in my opinion, especially for gold and silver, precious metal in general. Okay, stocks come under pressure, flat in US, falls in Europe and Asia. Okay, stocks coming in pressure. We'll talk a little bit about that on what's going on now, why stock prices, way up at the moment. Again, I would say it's got a lot to do with Trump's policy, what Trump is saying to media, because at the moment, I'll be very honest, what's going on in the world of finance with regards to Trump is that they don't actually have a very clear picture of Trump's plan for the future. This is the truth. They do not have a very clear, solid picture on what he really wants to do, would be doing, and things like that. It's all very, very generic at the moment. Okay, so this is where the problem lies. So sterling, for example, fell 20%. We're talking about silver, and on Brexit concerns, and the euro fell 11% against gold. I think we're talking about not silver, talking about, let's see, we've got NZD there, we're talking about the pound there, okay, the GBP, and because in my mind sterling usually has got to do with silver, 926. So Canadian dollar fell 10%, Aussie dollar 9%, Swiss franc fell 12% against gold. Okay, so this is really important. As we speak today, I don't know whether you guys know this, but in Switzerland, because we're just talking about the Swiss franc there are talks within the Swiss government and the army as well in wanting to convert their ex-base camps, in the mountains to actually store gold. So they want to convert these unused bunkers and things like that to actually store more gold. Okay, so this may actually be a result of more demand because there is a bit of a game plan played by the Chinese. You can type this out and read about it, where the Chinese, they buy the, I mean, even though they don't own gold everywhere, but most of the safes that are storing, or storage houses that stores the gold, may be owned by the Chinese. So they are in the business of storage as well. Okay, so this is just something for you guys to know. Outlook positive as gold and silver remain undervalued. Yes, I mean, for you guys who don't know already, you need to mine gold and copper to get silver. You cannot mine silver directly. So that does actually make it a little bit more attractive for silver's price. Okay, and another thing as well is for those of you guys in Asia, especially from India, you guys know that India is the highest consumer for gold, but some things have just turned around as of last week or last month, if I'm not mistaken, where there are hints and signals talking about how the demand for gold by the Indians in India would actually switch to silver. Okay, so this is another thing that we can actually talk about more in part 3, where I would then point out more medium to long-term sort of trading opportunities and trend that might actually reverse or turn and things like that. So we can then look for other opportunities in within the precious metals. Okay, so there you go. We've got these important points here for me to share. Now, from Morgan Stanley, we've got a bit of a chart going on here. As you guys see, if you guys see that chart that I've just shown you now, you've got a bit of an ABCD type pattern. And coincidentally, this is for gold. I think it's on the weekly chart, but I have also drawn patterns, and some of it have actually mirrored these sort of analysis. So here we've got investment bank, we've got the analyst named Natasha Kaneva. She's given this her take representing Morgan Stanley on gold. So she's talking about the mildly bullish position on gold. Okay, and then here you could see the quote there in the second paragraph. She says that we retain our price forecast. Okay, there you could see that 1,200 ounce in third quarter of 2016, and by the end of the year, now she's talking about a forecast to go up to 1,250. So 1,250 is what Morgan Stanley is talking about, and I see that this 1,250 range between 1,200 to 1,250 or 1,280, that's the sort of range of price that majority of major players, major banks as well. We've got Barclays, HSBC, Citi. I've seen that their analysts as well for gold are predicting that sort of price range by the end of this year. So here we could see that there is a likelihood of more price rise. We're just waiting for the time. So I want to bring you guys to the chart in a bit to sort of marry fundamentals, news, and to look into the chart, combine that with the technical chart pattern side of things. Okay, so here they also say that first our sense of macroeconomic risk has changed, you see. So this is what they have hinted. While the risks are still skewed to the downside, concerns have clearly diminished in recent weeks, removing one of the supports for owning gold. So you see this a bit wishy-washy that area there, but then the first line does give me a stronger hint of support areas that may take gold prices up to that level that I've talked about there, 1,200, 1,250, or even 1,280. But that is like now, like the shortest term for now. So we're not talking about the reaching of the 3,000, the 5,000, and all that. Yes, there's a lot of news, a lot of things, but it is important for us to work around what is going on now and take that in stages. Okay, so we don't miss out the big picture that might just shock us later on. Okay, so here you see the last paragraph. It says there you've got a break higher at this critical juncture. Sorry, would open the way up to strong gains all the way up to 1300 and the 200-day moving average at 1329, which is our base case scenario. So you've got all these numbers here by Morgan Stanley, courtesy of Morgan Stanley, 1200, 1250, and 1300, but it's given you some areas to look out for as well. So you can always I'll be showing you a little bit on the chart as well, on the chart pattern, so we can use geometric trading to sort of confirm what the other bigger boys are talking about and their idea or their trade ideas, and then we mix and match and see how that would come up to giving us a better idea on how can we trade gold. Okay. All right, so commodities chart logic here by TD Securities. As you can see, they have come up with a gold in the danger zone kind of thing. They have already longed, they have already created a position, they have already opened a position, they are in a position at the moment for gold already. Quite a number of analysts and experts, the bigger boys, bigger traders, I've noticed that most of them are already into the gold trade, so that may actually convey some hints of confidence from these analysts and these strategists. Okay, so they've entered, as you can see, 1165, targeting it at 1249. So you see that price target again at the 1200 area. 1249 is really just 1 ounce away from what we've seen Morgan Stanley at 1250 earlier on. Okay, so this is basically it, and a little chart there gives you an idea as well what's going on there. They have applied, I mean, most of the analysts in the bigger banks, bigger boys, they do use the moving averages 50, 100, 200, which I prefer to use as well, just to get an idea of what they see too. So this is something I do myself. Here we've got, again, this is all as of the 1st of December, but I've monitored it through. As you guys know, it's not much movement in the gold side of things as of now, but it still plays, it still holds strong with what they are saying at the moment with what's going on now. So here you could see firmer gold possible even when the Fed hikes. So what does that mean? Even tomorrow, if Yellen does actually say, okay, we're increasing rates, which is basically what's most probably going to happen. But this is what I want to talk to you guys about. We need to talk about priced in. Everything has been priced in. Priced in phenomena is something that is very important for you guys to know, because this is what had happened with Brexit before Brexit, and what have happened with the just recent presidency election with Trump. Okay, what that means is that when something is priced into a sort of forecast, when it does happen, it's not going to impact it a lot. Okay, so what that means is now it has been priced in that the Federal Reserve will increase interest rates. If that does actually happen, because just too many, the crowd psychology, the mass psychology has gone into it and made that so much something that could happen. Okay, and if it does actually happen, it's going to increase, but it's not going to make it increase a lot. Okay, but this is the but. The big thing about it is that because it's priced in so much for the Federal Reserve to increase rates, any little negativity concerns the US dollar, this will immediately make huge impact on the fall of the dollar. Okay, so anything negative, small, would actually just reverse the whole thing many times over. That's what priced in means. So it is exactly the same as what happened with Clinton. They thought she would win, and then she didn't, and then everything just went and multiplied many times over for Trump. Okay, so this is the market effect. It's called the priced in effect. So this is something that is very important. Okay, this is what have actually changed from the time of Brexit until now. So referendum in Italy and everything else, a lot of it has got to do with this kind of phenomena now, from now on. Okay, all right, so here, a less hawkish Federal Reserve Fed dynamic could go a long way to help gold. So less hawkish. You see, anything that is not really that good, even a little bit, just a little crack somewhere, whether it's economy or something got to do with it. They will increase it, but let's see whether there's a background sound of noise of negativity comes out of the US. If it does, that itself is enough to shake the dollar's position. So you need to be very, very careful here, okay? Because it's a lot of risk involved here. So hence the reason it is the times of geopolitics, the time of all these gameplay, politics, economics, and everything, a mixed match of these kind of thing that happens. Okay, so it's not enough just to look into the charts with the technical indicators. Okay, we need to look into a different angle. So this is important. Now we go on to this one here. President Trump, as I've mentioned earlier on, may be good for gold. After all, as you can see, you've got that light bluish one, gross federal debt, percentage of GDP, average annual gold prices. Okay, you've got that there. I think I've got some questions. So you see the target there as well. You could see the percentage, 120%. Nazim has got a question here. What is your view on the U.S. inflation reaching its target, whether or not interest rates rise? My view is that they will increase most probably. We want to talk about probability game, increase rates at this time, but not have a second one that they have planned in January or February or something like that. I think the first one first, and they have to increase it because we need to also talk a little bit about Trump's policy. Okay, whatever he's actually doing now and his plans and all that has reached media, going into how do you call that? Going into the media and communicating to the general public and investors. This is what he's about to do or would do. Okay, but it does not mean that he will do it, but that itself has already got a bit of an impact into the market. So whatever he's doing is actually very, very inflationary. Okay, because his model of working, we will talk about that just in a bit, is very Reagan oriented. Okay, Ronald Reagan, the previous guy who ran the States. So this is where the model looks like it is doing just that. Okay, the reason for that is he's cutting taxes, increasing spending. When you cut taxes, increase spending, this is called a helicopter money type operation. Okay, when you mix fiscal policy, okay, with monetary policy to create easing, okay, money, debt, and all that, then you are creating this helicopter money effect. So that can only be inflationary, only have to cause inflation. Okay, I think at the time of Ronald Reagan, the price, the interest rate was about 20%. Okay, so interest rate can only go down because it was high at the time. But now Trump's position, it's when the interest rate is zero. Okay, so it's got a lot of place, a lot of space to go up, a lot of room to go up. So it can only go up. So this is why I think it can only increase that. Yes, that's right. Trump's future actions in the reason why I think the Fed is pressured to hike rates. Yes, of course. That is true. I mean, it's got a lot to do with the shakeup that is caused by Trump. We'll talk a little bit about that. Okay, so you get a bit of an idea what goes on with why is it that Trump is causing that. We'll talk about that a lot in part 3, of course. But because he's cutting, you know, he's going into battling with huge companies as well, with the taxes side of it, you know, and now the question is whether or not he is going to be encouraging spending on the military defense side of it as well, you know, because whatever he's doing affects Wall Street. Okay, whatever policies that he agrees on and all that affects Wall Street. Wall Street is divided into two sides. One is the stock side of it, one is the bond side of it. So bonds side of it, bonds, buying, selling bonds and all that, it's got a lot to do with the government, Federal Reserve and all that, treasuries and everything else. Stocks has got to do with investors. Okay, so we need to understand the mechanics of Trump sort of ideology in running the country, economy and everything else with this sector, because this is what's driving the economy, okay? And this is what's driving in investors or not. This is important. Michael, we are going into, there is a very big likelihood of reaching negativity, negative interest rates. At the moment, if you're talking about the Feds, you can actually check, you can simply type interest rate current and then you'll get that, but you will see that the NIRP is what most of the central banks are driving towards. I think 0% now, but they want to go into the negative territory. So there are more and more hints at the moment, Michael, about of more, including the states, to go into negative territory and more negative territory, because this is what I would like to point out to you guys. Gold has got zero yield. Okay, it's not in negative, it's not in above zero, it's at zero. Okay, so if a country has got negative interest rates, it goes below zero, correct? If it goes below zero, what that means is the gold that they hold in their reserve, their bank reserves, would be much more of value than the money or the currency that they hold. You see, so if a reserve bank holds many reserve currencies, but these reserve currencies that they hold, whether it's Swiss franc or euro or the dollar, whatever, has got negative interest rates, it's actually very good for them. You see, so hence the reason I have mentioned it before, that the fiat currency is designed to only lose value even more from time to time. Okay, so let's see. Okay. Hi there, Grace. How are you doing? Thank you for attending the webinar. That's not a problem. If you can, send me an email at kenny@orbex.com. We will take it from there and reply to you, okay, and for the webinars that you've requested. Okay, Grace? Thank you very much. Okay, let's go to the next slides, guys. All right, here, you guys could see that it's a question of whether you've got this taper tantrum triggered. Okay, I think I've mentioned to you before. Here you've got, could the fixed income versus equity follow reverse? You see here, you could see on the right, you've got the Brexit there, and then it's asking whether or not it will mirror that circle area. Would it actually then go up? Okay, so again, it would give us a bit of an idea whether or not there is a great reversal of what's going on now, including gold. Okay. All right. Yes, not much longer to go. I think it's probably another 15 minutes or so, if you guys don't mind. Father's birthday. Oh, a happy birthday to him. Okay, no problem. Sure, I understand. Let us. We'll speed up a little bit. I think some more slides to go, but I can go a little faster, and we will do that. Not a problem at all. 85. Wow, happy 85th birthday to him. Okay, God bless him. All the very best. Okay, good. Okay, so let's get going so you can enjoy your father's birthday. Let's do that right away. Okay. Not long to go. Okay, we've got gold right here, guys. This is what's going on as a big picture, because I'm going to be sharing this slide with you guys anyway. So when you email Orbex, it will be put onto slide share, and you can always request that together with a webinar. So send me an email at kenny@orbex.com. So here you've got gold prices down over 30% during the financial crisis. As you can hear, what I would like you guys to do is just to look to your right. Okay, look to your right and look into where it is now at the moment. FOMC dovishes brings back to life, as you can see, circled by that that area there. We've got that channel line there. Okay, so that channel line that is actually slanting downwards. Okay, that channel line here in blue. Okay, this is where prices coming downwards. So there is a potential reversal around that area as well, where previous resistance could actually find support. as a potential. So that is again to give you a bigger picture on what's going on with the price of gold technically on a chart. Okay, now I've got a bit of a micro driver I want to share with you on the London Bullion Market Association, the forecast in 2016. We could look into precious metal as a whole, but let's look into the first one on gold. Let's look straight into first half. Let's forget about that. That's already happened. Let's look into the average analysis 2016 price. As you can see, 1103 has already gone past that, I think. So here we are looking into all that has actually been going, has actually gone on. So gone on meaning has actually reached that level and has gone beyond that level. So we are looking at more support that has actually, more and more support prices. So again, this is another evidence that there's another evidence that price of gold could only go up a bit more because it has actually gone even past analyst forecasts, even from the LBMA. So this is a good indication, mainly because of its increased percentage has gone beyond that 1.1% area. Okay, so let's see a couple of things here, guys. Gold has attempted to rebound but has fallen nearly 2% just last week. Okay, this is one very interesting paragraph on CNBC. If the Fed hikes, they most likely will. This comes from Gordon, one of the big names out there, and he was interviewed on CNBC's in the trading side of things with gold as well. So he says that and they most likely will raise hikes. We're talking about tomorrow, and don't deliver any sort of concrete information as to when they are going to hike again. You could see the dollar sell-off and the gold market rally. So you see, guys, this is what I'm talking about. When everything is priced in, somewhere something's not clear or a little bit negative about rate hikes or about economy in the US and all that, then you could see a very big shake suddenly on the US dollar on the downside and the gold on the upside. Okay, so that's what priced in meant. I've already explained that. Okay, so interest rate hike hints even before elections. Basically, they've all talked a lot about the interest rate hike, whether it's Trump or Hillary. Okay, now what Trump means is that, like what I've just mentioned earlier on, Trump is very much pro in cutting taxes. Okay, so he's cutting taxes, increasing spending, government spending we're talking about. He's very much into that. And then these two actions will increase deficits of the country, of course. Now, if you look into cutting taxes, increasing spending, this is exactly what Reagan has actually done. And Reagan has actually done that. With that as well, we've got oil prices going up. So as you can see, oil prices, whether or not it's going up or not, we can only take a look at live prices, look at it and look into what OPEC has actually done and things like that. And I think we've got more of a bullish run expected for oil as well. So I see that this whole model is coming through. So heaven for whom? If it is actually increasing, if it's actually cutting taxes, increasing spending, it will be a heaven for investors. So this is the whole aim of Trump, is to bring investors in. Okay, he's a businessman at the end of the day. So all this, will it be deflationary or inflationary? The answer to that is inflationary. The reason why I would like to hint you guys, I'm using question marks here because the question mark points are also areas that I would be quizzing you guys on the quizzes. Okay, so talking or walking, meaning that is anybody talking the walk at the moment or walking the talk? The answer is no. Why I'm saying that? Because Trump is actually laying out a lot of things at the moment, but he has not gone into the, how you call that, into office, into practice as a president officially. I think it's only 21st of January. So then you could see a lot of things happening as well. So that would then revolve into market sentiments, will give you a more solid sort of trend as well after that period of time, which is in the new year. Okay, so that's basically it. Now, Trump be good for Wall Street, but Wall Street has two parts, as I've mentioned earlier on. You've got stocks and you've got bonds. Okay, of course, everything that he's actually doing now, cutting taxes, increasing spending, and all that, will be great for stocks. It will be not good for bonds, but in the long run, it will impact stocks greatly. So that would then hint another sort of potential crash. Okay, so there we go. A little bit on the thing. These are the two last slides here, don't worry. So here you go. You've got as of closing on the 1st of December. This is what I've actually looked into. You've got an M-like pattern. ABCD is your ABCD type pattern. Okay, so it's got a bit of a losing side of steam because it's reached very close at the D area there, okay, at 1170 area. So I'm looking at a rebound of price or potential entry area above the 1180 area, 1185 and above, 1190 and above. Okay, so that would be a better hint. If it is actually going under 1170 and below, then you've got more hints to the downside. But I feel I'm more biased to the upside for gold at the moment. Okay, with the patterns and things like that. But talking about the downside, if at all it is actually haywire, totally gone away from our expectation that gold will go up, then I'm looking at that possibility of gold falling. And if it does, then we've got a bit of a shark bearish, it's called a bullish type shark pattern, but this is how far it could actually go down to, marked by 1.618% and the 2.24%. So if it does go down and it's got a very big catalyst that would then just pull the prices down, then it's got two areas, 1103 to the 1008 area. But like I've just mentioned, I'm more biased to the upside for gold at this moment of time. For the things that I've shared with you today, I see that Trump's policy, everything else on geopolitics, economics, and everything else is giving more probability to the rise of gold, but it's a matter of timing. So the matter of timing is really close, but for gold buyers, like I've shared with you at the previous slide now, 1180 and above would be a better price to look at for gold before we actually enter on the long for gold. Okay, so let's see whether we've got questions here. I think that's my last slide there, Gus. So you can easily make that that move to your father's birthday. We've got a question here. Sorry, will you be covering other metals? No. It's more into gold, but as you know, we've got lots of correlation with silver and the other metals, but they are all following gold's path, but maybe a few steps back. We will actually, I'll be sharing with you more onto the technicalities, and we can look into silver and all that with the geometric patterns in part 4. In part 3, I will be sharing with you on more on future of precious metal, and then we can dissect and look into opportunities for each metal as well from part 3 onwards. Okay, all right. Silver, Sashi, good question. What about silver if Fed rise interest rates? Now the thing about silver is, Sashi, silver is like a very cool brother of gold. Okay, it does not actually show its excitement too much, but if it does get excited, it'll actually just rise up many times over, and it has that potential because in real value, you've got silver many times over in terms of value compared to gold, okay, because it's much rare in a way. So yes, we can see that big potential, but look into India as well, Sashi. India is actually gearing up a lot of things at the moment in making silver much more attractive for its very huge consumer base, because it would be a transfer of consumer base of gold into silver consumers. So that would actually then be one of the first countries in Asia to actually strike that demand stroke, and that is basically where you can actually see everything else in emerging markets would actually follow through into demanding more silver as well. Okay, so yes, it's a good chance, and there is very big potential for silver. We're talking about in the States, in the different part of Latin America as well. Countries, they are more mining and operations that are concentrated on silver as we speak at this moment of time. Okay. All right, Gus, you have a great one. A grand birthday for your father. You take care. Have a very good evening, and we'll catch up again very soon, Gus. You take care. Bye bye. Chinese banquet. That's brilliant. Good. That's okay, Mohammed Asim. How you doing? That's all right. What you could do, Mohammed, is to just email me at kenny@orbex.com or go onto live chat Orbex and mention your requests about either the presentation slide or the recording. Okay, we'll be happy to help. Not a problem. You're most welcome, Piers Pinto. Hope you're doing well. All right, Sashi's got another question. Would there be I'm not sure what this means, SRIA Syria Silver 2 in the coming future? I'm not sure. SRIA, what do you mean by that, Sashi? Sorry about that. Is that a code word for something? Sorry about that. SRIA Gold. Not really sure what you mean by that. Another abbreviation of something? SDR you mean or no? Not SDR. Sharia Gold. Give me a second. Not sure. I must say I'm not sure. I may know it from a different perspective of things. Is Sharia? Yes, okay. You missed the H. That's okay. You know something? That's a very good question. There may be a possibility. It does actually depend on how the banking system wish to actually peg or gold or silver back it, because you know, like in Indonesia, for example, you've got their reserves in diamond as well. A very small proportion are in diamond. Some countries have got that too. So there may be a potential for that. I'm not really sure, but you know, there will be a problem with that as well, because you know, there's already a problem with a shortage of physical gold. So I'm only guessing that there may be there be even a bigger shortage of physical silver. So that I'm not sure. I would guess that the governments officially would want it to be official as a backup, as opposed to making that available to the public too much. You know, gold they may still afford to do that, but silver I'm not sure. But you know, that sounds like a very good idea. Yeah, if they could do that and meet the demand physically, I think they would then do that. Definitely. Yeah. Okay. RT London, what influences has the conversion of the money system in India on the gold price? Um, the influence at this stage, it's more because it's a consumer sort of market of gold, and due to some issues revolving black money in purchasing these gold as well, the officials in India are going very, very big into the whole money system, the structure and everything else. So they are tightening that down to a very big extent, and coincidentally they are also talking about silver, you see. So I see that the consumer sort of what do you call that trend would go into silver, but yes, it has a very, very big impact onto the whole financial structure at the moment, because you know, it's inbuilt into their culture as well, owning gold, you see, and a huge consumer of gold. So it has a lot of what do you call that impact onto the money system in India predominantly, and you know, it's a huge thing. So yes, do look into policies concerning silver as well, because as far as I've been informed, they are looking into this conversion to silver uh, uh, big time, and this conversion to silver would then impact the monetary policy or the monetary system much more than the current positioning of gold at the moment? Yeah, this is what we can look into actually a moment. And it's a very good question there, T. London. Thank you very much for that. Okay, guys, so that's basically it I've got for you guys. And if we can just, view, oops. Hello. Yes. Okay. All right. I think you guys can hear me now. No? Hello? Testing. 1, 2, 3. Okay. Sound okay? Yes, brilliant. Thank you so much. Sorry about that. Okay, I've just gone very quickly now to the chart. Let's just look into the Orbex's platform here on the MT4, and just want to share with you some things here. So let's just close the screen. Sorry, the chat box there. Okay, so let's go into the daily chart. That's the chart I've shown you. Let's see how much it's progressed. Not very much. I mean, from there. So this is what I see, an M-like pattern. Okay, labeled here as an XABCD. If I take that away, the middle line there, you can see it's an XABCD. This XABCD pattern, an M-like pattern, is made of the bearish ABCD, as you can see, and it's really close to where I've projected the D to be. So this is where an M pattern is a bullish type pattern once it's ended at the D area. So I'm expecting the technical side of it right now to comply with what I expect to happen from the fundamental side of things, okay, which is bullish the gold. Okay, so this is basically my take on that. And here we're looking at 1170, as I've mentioned, 1180 and above, because above the 70 area. Okay, the other area would be the 1170.60 area to look into whether it has gone above the 0.50 area to see more dominance by the bulls to push prices upwards. But 1175 and above would give us a little bit more hope to see more prices to the upside due to the principles of price psychology and things like that. Okay, with regards to gold, and that's basically what I can see happening. And if we zoom in a little bit, this is on the daily chart. You could see that the here itself, just from the candles, we're looking into more diminishing selling power, okay, by the bears or by the sellers, because just look into the candles itself. You've got more dominant bearish candles, but they only get smaller and smaller in size as well. That gives you the diminishing selling power by the bears. Okay, and we've got it way under the lines as well, the 50, the 100 and the 200 exponential moving averages. So there we go. That's basically it. You've got the USD index, for example, was giving us lots of hints to the downside. That's the daily. I mean, here you've got a reversal right there. You've got that extension upwards now. But if we go onto the 1 hour chart, you could see that sort of reversal there too. So we would like to also look into the dollar strength in order for us to, in order to give us a bit of a hint of the gold's strength. Okay, so there we go. Any questions at all, guys, on the technical side of things? I will be sharing with you guys on more technicals in part 4, of course, and part 3 next week on the 12th. I would be talking more about what we see as a whole on precious metal, so we get an idea of medium term as well as long term area on how current monetary policies and what the big boys are doing would actually pave what kind of trend for us in precious metals as a whole. And then on the fourth part of the certification series, we'll go into practical what do you call that, geometric trading, as well as geopolitical analysis, and combine that together into a trade plan so that we can then start planning our trades for gold and the other precious metal. Okay, so that's basically it. Any questions at all, guys? I'm just sharing with you on what I see on the charts, but we'll get into the charts much more in part 4, practically. And if you guys have got any questions, if not, I'll just wrap up here for the second part of the certification program or series. Any questions at all, guys? You guys are clear? Any questions, whether it's technical side of things or fundamentals with regards to precious metal or gold in particular? All right, I'll just wait for just a few minutes in case you guys have got any questions. If not, I'll just wrap up here, guys. Okay. All right, guys, no questions at all. Okay, that's it. My battery for the laptop is also running out at the moment, so I'll just wrap up this second part of the certification series, and I would just like to say a big thank you for attending today's second part certification series, and we'll see you in part 3. Okay, and let us just meet up again in part 3. And for those of you guys who would like to request, as I've mentioned, send me an email at kenny@orbex.com, as well as communicate directly to live chat Orbex for any urgent queries or anything that you wish to ask. Okay, we'll be more happy to help. So thank you very much. Have a very good evening, guys, and see you in part 3. Take care. Bye-bye.